Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim, and here we are.
Now we seem to have established a pattern where we have 2 or 3 down days and a really sharp bounce up. Have you seen this kind of pattern before?
Oh, yeah. Actually, a friend of mine who, since the early 70s, a terrific trader over all the decades, and I remember about, ages ago, told me about the day and a half rally, and and he'd learned it on with, collapsing Vancouver stock promotions, and in the midst of a severe decline, all of a sudden you'd get a bounce, and often it would last for a day and a half. You can get this in the bigger markets as well. But there was serious erosion in stock prices since September, which is classic seasonality. Some stocks were down as much as 50%, 35, 40% drops, serious stuff. And then today, there was something they didn't like about Apple, and it was down something like 8%. So this is not a healthy market. But with the rebound here, was on October 26th that a technical tool we use gave what we call a downside capitulation, and from which you could get a bounce. And the low then after that using the S&P was on the 29th, and then now we've had this technical bounce. And then the last 3 days there's been good economic news. There's stuff that they liked, some employment numbers they liked, and something about a more friendly discussions on trade with China. So it added even more to a natural rally, and with a couple. So I think the rebound is now overdone, and they can go down now. Also, Jim, from time to time we've talked about historical comparisons, and on the 5 previous great financial bubbles going all the way back to 1720, they all crashed in the fall, a liquidity crisis. So there's a very strong seasonality there. I mean, you have to have things hugely speculative, to set up a sharp setback. So the pattern has been is that would roll over in September, which happened. October might record some of the heaviest selling, which happened, and then relief out of that, and then each of those previous bubbles with their problems in the fall, after a bad October, a rebound, and then markets were tested in November, down again, and then the last of the accounts that were offside on margin would be sold out, and then you would have a rebound into the first quarter. So, but what you've got, there was one other one, the bubble of 1825, where for whatever reason the heavy liquidation went on right through until, more or less Christmas time. So the natural rally came in, and it was added to by some good news. The shorts have been squeezed terribly, and I think the markets can have a few weeks here of going down and testing previous lows. Of course, the stocks that have already been waxed by 30 to 50%, they may not go down as low, but there are some that haven't been whacked yet, like, for example, overnight with Apple. So it's not the one-way bull market that we eventually learn to know and love. It's into now, I think, the transition from a great bubble into a contraction that could be fairly lengthy.
We'll have more with Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Welcome back. We're speaking with Bob Hoye. Bob, if we're expecting a long contraction after a very positive market for 10 years, will gold finally perk up?
Yeah, that's a good question, Jim. The best way to analyze gold is because it's owned by so many people in so many different countries, and in so many different countries you got so many different currencies, so everything's different. So decades ago, when I did the research, I just figured in order to know what's going on with gold, you want to know what the real price is doing, which means you divide it by the consumer price index in the senior currency, and I sat down and did it by hand annually with the numbers all the way back to 1700. And what you get is that in a financial bubble and mania, you also have some advance in industrial commodities because there's an economic boom on as well with the financial mania. So the pattern has been is that gold's real price declines during a bubble. So if you look at the real price in the last decade, it rallied up to a fabulous high in 2011, and by the way, the whole sector, precious metals, showed all kinds of technical excesses, which we noted, and essentially the price of gold divided by the CPI has come down since. But in the last year, it's trying to bottom. It's been in a trading range. It's only posted every month, but so history worked again. You had a fabulous bubble, and you had the real price of gold going down. And the other part of that pattern, Jim, is that the gold stocks, of course, will underperform because they're an unfavored group. But as you go into the transition from an expansion to a contraction, one of the features will be that the real price of gold turns and goes up. And the importance with that for the mining industry is that it reflects that the price of the bullion that they're mining and selling is one thing, and the cost of mining it is the other. And when the real price is going up, it represents that their profit margins are improving. Because you went through a long period in the senior currency when it was sterling, and the U.S. dollar when the price of gold was fixed. And an example on that one was in the 1920s, 29, it was fixed at $20.67 an ounce, and it was fixed right until the end of 1932. So the Homestake was the senior producer then, and the stock went up a bit with the bubble in 1929. Of course, went down a lot with the crash. But in the boom year, their mining costs had gone up, and so they didn't make any money. And then in the following so you go 19, 30, 31, and 32, the real price went up, and their earnings improved by something like 130%. And the stock was up 130% going into the end of 1932 before Roosevelt changed the price of gold. And actually what he did is when he moved it up to $35, it reinforced the natural move, which for the real price to go up anyways. So the gold miners became the outstanding sector during the 1930s. Homestake, you could have bought it in 1930 for $9, and eventually it got up to $65. And in those days, they paid out virtually everything by way of dividend. And so through the mid-1930s, you had a stock that was up to $60 level and paying $4.50 a share dividend. Fabulous returns. But, Jim, this has happened on every post-bubble contraction. The real price of gold has gone up. Gold miners go to work. Gold stocks become high performers. And this is what we're looking forward to. Of course, it's because you've got problems in the big stock market that hit on the gold stock prices. The entry is rather difficult, and we're working on that. But certainly by next summer, the gold stocks should be very much higher than they are now. The trick is the entry, and I always like a challenge. Don't you, Jim?
No. I like the quick and easy way. We'll have more with Bob Hoye right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, Canada and Mexico now have legal marijuana. Has that made a big difference in the marijuana stocks?
Oh, they were fantastic. We didn't get onto it fundamentally in the early days. But then technically you had great rallies and great sell-offs. And of course, going into the peak, it was classic, up on the news, October 17th, that was the high, overbought, and now it's correcting. And it also could be over the shoulder and into a general bear market for the big market. So further gains in a highly speculative sector such as the pot stocks, I don't think so. The gains have been fabulous, and it's time to move on for something else. One of the things I've seen, Jim, is there's been some bad dealings in the general stock market, like with Trump's reduction of taxes. Many U.S. corporations brought, money that they had kept elsewhere, brought it back into the States. Now, what did they do with it? they went and bought their own stock. But I think we talked about this a few months ago, because then you have the month-by-month reports on what insiders are doing with their positions. So some of these companies where the shareholders, in effect, were buying the stock, you're buying stock out of the market, and at the same time, insiders, they have to report, and they were selling quite aggressively, which can happen close to market peak. So I don't like that sort of stuff. And then the other one I noticed here was a few years ago in the boom in China with the stock market, that people high up in the government who you'd think would all be very faithful communists were getting involved in stock deals. And some of them, I guess, were private, but there was a headline here recently about the Chinese government has been buying distressed private stock deals. So you know what that's about. The high-ups in government got playing in equities, not yet listed. And then they had valuations, of course. And then it's turned bad. Their stock market turned bad away before anything got hit here. And there you are. You then have them taking advantage of being in a privileged position and getting positioned and then probably leveraged. And then with the stock market going down, valuations even for private companies would go down. And here you are. They're having the taxpayer bail them out. I mean, this is bad business. It's old robber baron day stuff. And as a market historian, you just look at this and just say, not good at all. But the problem is that when people are in power and privilege, often they will abuse the system. So sad to see. And what happens is that in these wild bubbles, sort of anything goes, and it's an opportunity for malfeasance. And most of it gets revealed when the price of the stocks go down that are involved in the bad dealings, and usually the operators are caught offside on margin and stuff like that, and then it comes out. So one thing about if we do get into more of a contraction and more of a decline in the stock market, there will be some entertainments, if you will, by way of bad dealings or malfeasance and things like that. So not a pretty sight.
Well, China's not the only one buying up stocks. The Bank of Japan, through ETFs, is becoming the majority shareholder of most of the corporations in Japan. Is that a good idea?
That is not a good idea, but the central bank ideally is the custodian of the currency, and you want to have a reserve backing that currency. And traditionally it used to be gold, because that really worked. And then over the last couple of generations of staffers at central banks, Bank of Canada, Federal Reserve, Bank of Japan, they're all educated in economics with PhDs and stuff, and then they get into modern portfolio theory, where you can get your best return out of equities, and they then look at the reserve that should be behind the currency and consider it as a portfolio. So then they're buying fixed income stuff like, the most liquid items would be, money market stuff, U.S. Treasury bills. And then they look at that, then you get interest rates coming down to effectively zero a few years ago. So then they look at getting a return out of it. So then they get into equities. And it's absolutely crazy. The whole point of a currency is to have it backed by a very solid reserve, and traditionally it's always been gold. So you have PhDs in economics totally corrupting the monetary system, Why? Oh, because they learned something. Well, actually, I can add on that, Jim, because Keynes came up with the idea that in a contraction, he came up with his ideas in the 1930s, you could throw credit at a credit contraction, it would go away. And, of course, this is nonsense, but what each government discovered was that Keynesian theories put them in place of power. So they then chose the economic theory that would enhance their power and their revenues, and that's what's happened. So this is how you've ended up with a bogus theory of intervention being dominant, and what you have then is this great financial speculation. And I can say that you can have great speculations when the senior central bank is on gold, and it's at least disciplined. But what you've had now with these little recent serial financial bubbles is that the central banks are not on gold. There's no discipline. They become extremely reckless. So where the public traditionally could get highly speculative on its own, this has been exacerbated by highly speculative theories in government central banks. And I think that when this eventually rolls over, and if we do get into a serious contraction, it'll be so bad that the public will demand that central bankers never be reckless again. And sometimes marvelous things can happen in the political marketplace, and I'd be looking forward to that. It's going to be very interesting, Jim.
Bob, are there any alternatives in Canada for people to look at if they don't like the way the current money system is operated?
Well, no. You've got no alternative. One should own, as the saying goes, a little gold for insurance reasons, but to try and trade gold and make money is very difficult, particularly in a post-bubble contraction. The way to make money in such a contraction would be gold shares, because there's the beneficiary and the leverage. And the other position we like that has worked well in previous storms has been some good grade corporate bonds. Good grade, you're not going to have too much credit risk, but then only 3 to 4 year term, and then you don't have too much price risk. And then for Canadians, you want to own the American bonds because in a post-bubble contraction, the senior currency goes up. So you can, whereas if you go straight to cash, T-bills, they're going to go down to 0% interest again. So why roll over on it and get no interest? So a 4-year good grade corporate bond is a nice place to be.
Bob, thank you so much for chatting with us.
Yep, Jim, good to be with you, and look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob or any of our other guests, you can send them to info@howestreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.